S&P 500. The US stock market was closed last night, but the futures market was open. The ECB, the European Central Bank, as mentioned yesterday, were having an announcement, and they were just simply following their policy of supporting the market. So we see a lower euro and a higher stock market with the DAX and also with the FTSE as well, which is up quite strong. The other main point to bear in mind is that the non-farm payroll figures tonight in the US. Now, last Wednesday we had our ADP figures, the private employment figures, which were at 188,000, up from the last one of 134. So, quite a significant move there. So that should be the lead-in for Friday. And normally, if we're going to get a strong Friday, then we'll get the follow-through on the Monday as well. So that's what we're looking for our local market, the ASX 200. Essentially staying above the 4750 would see the retest coming up towards the 495,000 area, but we'll look at that in a moment. Looking at the S&P 500 here, look, we understand that that this particular wave 4 here is a little bit small for the situation. So until it's got support on the medium level here, 1650, it can fail and move down. So we do need to be mindful of that situation. But as it stands at the moment, the move up through here is looking quite positive, and we've been essentially positive or long above the 1600 or the trade above the 1610 there. There's going to be trend line resistance at that on this trend line here, of course, as well, coming up here into the 1634, 1635 sort of area there. Here it is here on a smaller basis here. It's still possible to count this corrective here, but it's certainly got a positive structure there as well, which sort of dominates the situation. So we can't expect too much out of this wave 5 here because we've got the extension in wave 3 here. 5 waves, that's quite long. So that means that wave 5 here and wave 1 will be pretty much the same. So we'll see that pan out through there. So expect resistance above here. You also know too that obviously this is group 1 here, the 1, 2 and 3 here, and we normally see a corrective pattern across here. So we would be looking for a move 2 here, a move back, a move up higher here, hitting resistance at the 134, 133 to 135, then having some type of correction across here. If this support is found on there, then we'll see a move up from that point there. But the other thing too is being a wave 5 here, we can expect an A and a B and a C. So we could probably expect a larger correction before we'd see further upside. So it's going to be a little bit, there's going to be resistance up through here into the 1650. This is what we're sort of tracking here at the moment. So this move up through here, if we had to count, this is it here, the 15-minute chart here. If we had to count this, it would be, let's just get this here. It would be likely wave 1 to here, wave 2 back to here, and all of this being a wave 3 here in terms of the 1, the 2, the 3, the 4, and the 5 here. But the thing here, this is not finished yet because we can see this 1, 2 and 3 still unfolding in here. But what we can see through this move up here is that all the trends here are expanding to the upside, aren't they? They're not, they're not diminishing to the upside. So that's the momentum really, which would be enforced by the amount of volume moving into the market as well. But as I pointed out, this would be the top of group 1 here, the 1630, which is really important. And normally we would see some type of correction through this point here in terms of the arrival here, the reaction, the first high above the level, then the A, the B and the C across here. After we've got a 3-wave swing, then you're looking for that tested support there. And if that's the case, then the safe trade is like that situation. Of course, you can get in anywhere, but it is resistance. you want to see a corrective pattern, you want to see it testing support there before moving in higher there. This is the same with the US 30 as well. We've got wave 4 here, but as I mentioned that, we've got, I can't recall now, but, 22 days or something through here, and on the wave 2 back down here further we had like 43 days, so it's still half the size, so we can see a much larger correction possibly going across here. Even being a wave 4, you get all the complicated ones, so we could get like a triangle across here, because this would count here in 3 waves here. Look for a 3-wave price action back up through here, another 3 here. So a triangle is a 5-wave pattern. It's possible, So so a triangle would be here, 2, 3, 4, 5 to here. That's kind of what we would see. That it's certainly possible. Each leg here would be in 3 waves here. Okay, so this is what we can see possibly unfolding through here. So it's an option that we've got to put on the table. But the thing is that this 5-wave structure here, once it's completed, the A, the B, the C, the D, and the E, once it's completed, then we'll see upside movement from that. So that would be the positive side there. Yeah, so it's just a little bit sort of tricky to navigate through here, but one of the other positive things is that now we're back above the 15,000. It hasn't really been retested. It's sort of like the first high above the level, isn't it? So it could hit this trend line through here. And also what I wanted to point out here as well is that this particular midpoint here, it's group 1 is 1, 2 and 3 in hundreds this time, but the 2 here is really important. It's going to become the balance line through here. It's the pivot within group 1. So to find support on that, while the market's under that, it's bearish. So we really need to see support above that there if it's going to break through this trend line through here as well. So we've got the 15,200, which is the pivot within group 1, and it's got reasonable amount of importance there, and we've got the overhead trend line there. So if you're trading long here, then you'd want to be looking at that target there to exit. The European markets were were open and moved up. We were looking at this yesterday. We were counting. We had a bit of a rough 5 waves up through here that counted reasonably well. We were also looking at an ABC here yesterday, pulling back to the 6180 here, and it's, as I mentioned yesterday in the text, that it was a bit small in terms of time, rather compared to this here, but it did have the right pattern and it did pull back sufficient amount to warrant that being finished. So now we're looking for the next 5 waves up, which would be a bit like this here, the 1, the 2, the 3, the 4 across the 6400 here, and then wave 5 up. And this is the 6500 up here as well. So that's a medium level. So it will, have some problems there. I mean, it doesn't have to stop there. It can, move above it. But we are tracking this particular 5 waves up through here. And if you're trading this market here, then you can pretty safely buy this anywhere. For any pullback you can buy. Otherwise, look for support on top of 6430, the top of subgroup 1, and look higher from that point there. But don't expect, I suppose we're still in the 3rd wave actually. We're still 1, 2, 3, 4, 5, 1, 1, 2, 3. I think we're still in the 3rd wave. So this 3rd wave here is still actually completing here. So there's more to that. Now the FTSE's got a relationship to the Australian market, so we can look at those two together in a way. So the Australian market here, we were looking at this. Well, just coming back a bit, we're considering this being 5 waves down through here, and that means that we would have an ABC retest of the sort of supply level through here. This particular move we've got up here in the A wave here normally the A wave and the C wave have got some sort of equality relationship. So we can look at, the C wave here having about the same distance here as such. What we have been looking at here is, yesterday we were looking at this three-wave price action through here as being corrective, and once that's completed, then moving to the upside. So as long as the market stays above that 47.50 there, it's pretty well a supported market. Of course, there's a triangle pattern here happening, or pennant rather. So this particular one here. So we were looking for being long above the 47.72 area. Now, it's obviously hit trend line resistance up here as well. It does appear that we've got a little five-wave structure from here. So if we drill into there a little bit further, we can count this. This structure up through here in terms of up for one here, back for two here, and to me this is all the third wave to here, and this is the fourth wave here, and this is the fifth wave that can be finished at that point there. So and this is the third wave in the middle here with the 1, the 2, the 3, 4, 5. So normally after 5 waves we get an A and a B and a C, and then we get further upside coming from that there as well. So we are on track to go further up. Now the US markets were closed, but the futures market drifted higher. So the FTSE was much higher as well, so that was like 2 or 3% higher. So we've got a reasonable chance of moving higher here. Let me just check here the 48.18. Just checking the 48.18. So yeah, this is 47.94 here. So the futures are at 48.20 roughly up here. So we will see these highs being tested today. What I was sort of hoping for this is the ASX 200 here on the daily chart here. So if we get strong ADP figures coming tonight, strong employment figures coming from the non-farm payrolls tonight, then that's going to give this a bit of a boost. So we should see the Friday today being positive, and the Monday. So we should see, looking for some sort of move like this over to here, retesting at least the 49.50 from that point there. One of the things that we can look at as well with other leaders now, the CBA bank here is this is a situation here. So I guess if CBA stays above this particular low here, stays above the 68 here, then we've got a positive market from that. I'm a little bit concerned about that because what we've got here, we've got this like a little 5-wave structure down through here, and we've got this sort of corrective structure through here. So if this is the actual C wave here, like it can do that it's a bit dodgy, but so I guess if you wanted to trade long, if you took that high out there, 69.01, 2, 3 above that way there, then we know that we've got a positive market in play there, and we can call this wave 4 here into this area through here. But if we get a breakdown through the through this point here, then we've got problems at that point there. So just keep an eye on this, because this will obviously lead the way higher. The base metals, we'll have a look at BHP, because US BHP and the Australian BHP are in a corrective pattern, and they will move to the downside. Okay, just looking at BHP here, this is the Australian BHP. We can see that this particular move through here has got overlapping wave structures through here. So it makes it corrective. You see how that's got that sort of 3-wave price action through here? And if this had moved straight up from here, this bar here moved straight up from there, then it would have been fine. But because it's dropped below here, it really makes that a three-wave correction. So we should see lower prices come in through here. So BHP still, material sector still to the downside there. The copper market, we've been looking for it in terms of, this is the 4-hour chart here, but we've been looking at it as an A and a B and a C wave up here. And in the C wave, we've got the wave 1, the wave 2, the nice strong third wave here, the fourth, and the fifth wave here that we're looking for to make a new high here. Well, look, that's made a new high, so that could be in place now. So we need to see how this unfolds across here now. The 315 here is a bit like the sort of balance line through this particular area through here. So let's just see how that unfolds, because we expect BHP to move down. So perhaps that's finished there. It may not be the end of the whole correction here, by the way, either, because corrections can get a bit sort of complicated. So this A, B, and C here may just be the first leg, and then we get an A, B, and C here, and then we get another sort of 5-wave structure here, so to speak, or we could get that triangle pattern happening through here. But what I normally find is that this is the first bounce off this major level here. So normally once it comes back down again here and finds support, somewhere in here, we'll have another bounce here, and hopefully that bounce will come back up to that supply level there where the sellers are, and then move down from that point, and then they'll move down from that point down to this point. So we get that sort of lower highs there. Then we know that that it's got further to go down. So that's what we'll be sort of looking at from that point. There's no change in the oil market as such with our wave count that we went over yesterday, so I won't go there, but we're just looking for wave 4 here, wave 5 to here, wave 3, wave 4, wave 5, and then an ABC. So there's a lot of work to be done around the top of this sort of area through here. So it means that you just need to trade shorter time frames, work inside each $1 there. The gold market, not a lot of change here because of the US markets being on holidays, the Independence Day, but still we're working through this particular A wave, B wave, and C wave. Now, I thought that the C wave would move down a bit lower into the 1230 here, the next level down, but I can see that it's really finding the 1255 here, the second strongest number, as the the magnet, and it's the balance line. It's really sort of working towards that. So you don't really want to miss the trade. So if it does, if we do have a lazy sort of C wave here, as I mentioned before, the A wave is normally the sharp one, and the C wave is normally the on more of a 45-degree angle. So if that's the case, and it looks like that means that it's quite strong. So finding a way into the long side is that you could use the 1250 as a as a retested support there, as such, with a move up here and coming back and testing it through here, so to speak. And if that's the case, then you can line those tops out and move up from that point. Otherwise, you could use the some little next levels up, which would be, first of all, the 53 here. So because the 53 here is actually the top of a group 1 there. 1, 2, and 3 is always group 1. So the top of group 1 is support. This time around, you could use that there and then look to add on top of the 50 as support, 55, sorry, and add to that position there. There will be resistance at, 65, as you know, 72, that's all group 2 stuff there. But finding a way in on top of 50, 53, 50 is a risk. 53 is safer, and then adding on 55. Now, there will be a reaction once you get to the 55 here. It could be severe, or it could be sort of just like this situation here is quite sort of normal as well. So it takes a little while to from being resistance to support takes time to develop, and you really need to go back in and study. Each market's got its own little fingerprint, so to speak, and you need to go back over each trend and have a look and see which it will have 2 or 3 ways of treating price level, and you need to understand those 2 or 3 particular methods and work with those. Right, let's have a look at FX. Okay, starting with the euro here, the US dollar is still pushing higher and the euro is still pushing lower. The wave count has been a bit tricky for us to play with, but I think one interesting thing now is that's occurred, as you can see here, is that the top of group 1 here, the minor group 1, the 3 here, the 130, it was resistance and was support, and now it's resistance. So that puts us in bearish mode, and it puts us on that side of the market. The other interesting thing here, as we just talked about with the copper as well, is that the bounce here and then the lower highs coming in through here. So a little bit sort of late for that, but the ECB announcement has pushed this down further through here. So what I was just encountering this here, we're looking at 5 waves moving down through here. So once this is completed here, we'll see some sort of ABC pattern here, and that would be the way to short that there as well. So just looking at that on the 20-minute chart here, it is possible on this move up through here only ended up being in 3 waves and not 5 waves up. So, but this move down here could also be counted as 1 here and then back for 2 here, then down for 1. So we could label this here as an example just as wave 1 here and wave 2 here, and the reason for this is that it will probably affect the situation down here further. But for the meantime here, we've got this strong move down through here, which is would be a little third wave, and then this would pull back here. The normal retracement for wave 4, as you know, is the 38.2 retracement levels through there. So it's done that quite nicely through there, isn't it? The only other thing that we could say about the wave 4 here is that it could get a bit more complicated in terms of an A wave to here, a B wave to here, and a C wave coming up here and then moving down through here. What we normally find is that the 129, that in group 1 here, the 10, 20 and 30 here, if the market fails to find support on top of the 30, then it's normally down from that point there, and we would use the pivot, the number 2 here, as resistance to look for further downside through here. But don't expect too much to the downside here, because these wave 1s here, if that could all be just wave 1 or just the wave 1 from this point to this point, then it's not, it's only going to come down to here before we see that that ABC bounce again coming to the upside here. So eventually, if this moves down from here in some some fashion through here, then we would see it make a new low here, and then we would see the A, the B and the C wave back up through here, being a shallow retracement, and then down. So I think give this market time to mature as a low and to have its rally and to find supply again through here before looking to short it. So just give it some time here. The Australian market, the Australian dollar, what we were looking for here is we were looking for a low to come into play here in terms of down for 1 here, back for 2, the 3, the 4 here, as an ending diagonal triangle because of the overlapping wave structures here somewhat. So what we're considering here, a move, so we're looking for that wave 4 to wave 5, which would be wave 5 of a larger degree, then wave 3 here. And if that's the case, from wave 3 we'll see wave 4 move back up higher through here. But to do that, in the first instance, I know from the trading levels, we would want that 2, that pivot, that 1, 2 and 3 here. We'd want support on top of that to really call that in at that stage there. Technically, we could say from 91.55, a breach of that would be enough in Elliott terms to send that to the upside there. So there is reasonable evidence that this wave 3 is in, but I wouldn't go on that. I wouldn't call it in just yet until that 92 became the retested support that point there, because we just may get sort of an uglier thing coming down through here. And also being in Group 1 as well, as we mentioned, coming into Group 1, the 93, 92 and 91, is that it will see the market normally bounces around these numbers because it's where the orders gravitate to. So in terms of getting this right and trading this here, you may already be long, and that's fine. But and this market that's moving up through here is actually being quite positive, because we're getting 5-wave structures to the upside and 3-wave counter trend. So this 3-wave counter trend here is a bit similar to this one here, isn't it? Yeah, so you can see how this one came down, the A wave, the B wave in 3, and then the C wave in 5 here. It's dawdled around a little bit here, trying to, vibrating around, getting support on 91 here. Well, then you can do the same thing here at the midpoint, the 91.50 there. So if you don't get in early, but if you get retested support on the 91.50, well, then you can go from long from that point, with the expectation of that high there being taken out, which would leave the target at 92 before the next larger correction would unfold. So that would be the go, but don't get in early, because this could here turn into a 5-wave structure to the downside. What we do want to see is that if the market moves up through if this is wave 1 or A wave here, then it would make it an A wave if we got to move up, back up through it. We had a little spike there, but in currencies, I don't go off that. You need a nice clean break above that low there. Then that would make that an A wave, a B wave, and a C wave from here, and then would be looking for 1, 2, 3, 4, and 5 up to this point here. So yeah. You could get in early, but you just need to put the stop under this little area through here if that's the case. But wait for the the Australian market to kind of wake up, so to speak. Alrighty, that's it. So in a bit of a nutshell, if our Friday closing is strong, then we can assume that Monday will be the follow through as well. So tighten up on the short trades and get net long if that's going to be the case, and you can do that the Friday in the morning session and in the evening session as well. So all good. Alrighty, thanks for listening and enjoy the weekend.